Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV, our opening commentary, June the 23rd, Monday morning. And thanks for joining us as we take a look at our trading day ahead. We hope you had a great weekend, kind of a strange week last week with a holiday on Thursday. And we took a little bit of time off. Got away on Thursday, Friday, but was still working. Of course, it's easy to work anymore from a hotel or anywhere. If you have internet and Wi-Fi type signals. So take a little time off, get away, and back at it again this morning, back in the office. So let's talk about some of these markets in here. Look at the overnight trends first of all. Let's look at crude oil. 40 points lower. This is after opening $3 higher last night. There's been calls all weekend. Of course, I'm sure everyone knows about what happened this weekend with Iran. Calls were for sharply higher, $120 a barrel, maybe more than that. And it's certainly, those things are still in the cards. But what is the market telling us? Stock market's starting to rally after opening lower. Markets are telling us we have a war premium already priced in. And I think there's probably $10 to $12 of that premium. And the market, anyway, I think at this point believes we're going to reach some sort of agreement rather than a full-fledged war. And, of course, you have to worry about what's going to happen with if that strait is shut down and it shuts off crude oil exports. That's 20% of what they export, but it also hurts China considerably. So I just don't think that is going to happen, and I think the market agrees with that is not what is on the cards here. So we're seeing stock market rally off of its lows, trade higher. Gold and silver, usually the safe haven type buying play, is now trading lower. The U.S. dollar is firming up this morning while nat gas and crude oil are trading weaker. The grains, I think, are going to try and ignore a lot of the noise and what's happening in some of these outside markets. Dees corn is down almost 5. The beans are down almost 6. And in the wheat, we're down 4.5 to 5 cents overnight. So let's talk about what's happening and talk about what's we can expect, what's on tap today. So for this week, I'll be doing RFD TV this morning, Wednesday, Thursday, and Friday of this week. You can follow us on Twitter, Midwest Markets, at Brian Hoops for the latest market information. All right, weather maps. Let's look at those. That's the most important thing this time of year to look at. They continue to call for nearly ideal conditions across the Corn Belt for corn and soybeans. 6 to 10 day and the 8 to 14 day are calling for above normal temps and above normal precip through July the 2nd. I can count on one hand in my entire career of when it has paid off to be long after the 4th of July in the grains. It is not very often. So if you're still long in the bin, if you're still long on paper, if you haven't sold anything and you're long out in the field, you really have to look at rallies as, I think, selling opportunities right now. We could have some short-term rallies if the weather changes, of course. If it gets hot and dry in late July and August, beans could soar higher, dragging corn with it. But what we know right today, the 6, 10 day, 8 to 14 day, they look really good. In fact, there's a lot of rain, 3-4 inches forecast for some of the parched areas in Nebraska, Minnesota, Iowa, northern Illinois. Those areas going to get a lot of rain early part of this week. They badly need it. Technically, soybeans posted an outside reversal on Friday. Corn completed a 78% retracement. Then those markets turned lower and ended lower. First notice day for the July grains, that's coming up this Friday, the 27th. And if we haven't seen that long liquidation already, there's been a lot of July grain futures liquidated. There's going to be a little bit more on Friday. Brazil's second corn harvest is only 7% done. It's way behind last year's pace, but it's very close to the average. Probably because it's been a little bit delayed, but it's also a big crop. It's going to take a little bit longer to harvest. So some of this crop is going to start hitting the U.S. We did have a sale of corn on Friday, but our sales from now until the fall months are going to be few and far between. Cash cattle trade last week, it was softer. In the north, 236, 237 live, 376 dressed, so it's $5 to $6 lower on a live basis, $4 lower dressed. And light trade in the south at 228, and that's $7 softer than the prior week. We should be more of a steady market this week, I think, maybe even a little bit firmer. In the cutouts, choice was up $17 last week, and select increased almost $12. That helps restore these packer margins when they have softer cash trade and higher cutouts to work with. Cattle and feed report came out on Friday. based off of these numbers, we should trade stronger out of this report. The on-feed supplies are the tightest since 2017, 99%, very close to estimates. Placements were very bullish at 92%, well below industry standards, and marketing's at 90%, very close to estimates. So friendly overall to the industry, bullish for the placements of cattle, and with crude oil backing off, there's not that inflation fear that we could have seen if we were $6-8 higher this morning. So that should help cattle recover as well. I'm going to sign off and wish you a wonderful day of trade. Good luck, everyone, and we'll talk to you soon.